Good morning, this is Tommy Lackey, and in this video I want to do a quick review of the macro market breadth situation as I dig into my strength and numbers report, which will be out later this evening or in the morning. So let's get started here with the new high, new low differential chart. Always a good one to start with so we can kind of see how we're looking from a strength standpoint as far as making new highs. To me, this still looks pretty solid. Now, of course, we did drop off a little bit here towards the end of the week, and the new lows started to increase a little bit, all the way up to a whopping 14 new lows. But it's really not something we get all that worried about until we start getting down here and the new high, new low differential starts to turn negative for more than a couple of days. As we can see, it's turned negative 3 times over the last year, but never really turned into anything. So we want to keep an eye here, but for now, this indicator looks fine. Now, if you couple that with this advanced decline line that continues to make new highs, I'm not really sure exactly where all these major market top calls are coming from because they're certainly not showing up in here. Now, many believe the McClellan indicators are some of the most important when it comes to breadth work. And as you can see right here, the McClellan summation indicator, which is or summation index, which is our longer version or longer term indicator, continued to make new highs this week as well. And down here, the McClellan oscillator is not making new highs. Something we want to keep an eye on, and we'll talk a little bit more as we look at the other short-term indicators. Now here on our moving average breadth chart, which shows many time frames, the short-term indicator here, the 20% above the 20-day moving average, is showing a little bit of a divergence that we want to keep an eye on. And we'll talk a little bit more in the report tonight on exactly how we'll use these. But again, you always look up to the top 2 frames and see how they're holding up because that's your longer, mid, and longer term views. And here we have our breadth thrust indicator, which is probably our shortest term breadth indicator that we use. And again, we had this higher pivot last week, and now we're ending up with a divergence. So we'll talk a lot more on how we use these divergences and over what time frame they might be effective. And our final chart here is the percent day chart, where we show 80 and 90% up and down days, a chart that's been really quiet for a while until Tuesday of this week. We'll talk a little bit more in the report about why that might be important and what kind of a signal it might have given us. Okay, so there's a quick overview of what the macro market breadth situation looks like. And we'll dig into this a lot deeper once we get into the strength in numbers report later this evening or in the morning. In fact, in that report, I go on down to the sector level and even the subsector level in some cases, as well as add in a relative strength component that allows us to boil this research down into more actionable ideas on either the ETF level or the individual security level. So thanks for taking the time to view this video this morning. I hope it helps your research for the day. And if you'd like to be added to the beta list for the research or strength in numbers report, please email me to gtlackey@gmail.com. And if you're on StockTwits or Twitter, please add your handle just so I know who I'm talking to. Or you can always visit me at gtlackey.com where I post all of my research. All right, hope you have a great weekend and look forward to trading with you this week. Bye-bye.